This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. India has cut base import taxes on palm oil, soy oil and sunflower oil, according to a government notification, as the world's biggest vegetable oil buyer tries to cool near record price rises. The reduction in taxes could bring down prices of the edible oils in India and boost consumption, effectively increasing overseas buying by the South Asian country. The base import tax on crude palm oil has been slashed to 2.5% from 10%, while the tax on crude soy oil and crude sunflower oil has been reduced to 2.5% from 7.5%, the government said in a notification late on Friday. The base import tax on refined grades of palm oil, soy oil and sunflower oil cut to 32.5% from 37.5%.
OPEC on Monday trimmed its world oil demand forecast for the last quarter of 2021 due to the Delta coronavirus variant, saying a further recovery would be partially delayed until next year when consumption will exceed pre-pandemic rates. The Organization of the Petroleum Exporting Countries, OPEC, said in a monthly report it expects oil demand to average 99.70 million barrels per day, BPD, in the fourth quarter of 2021, down 110,000 barrels of oil per day from last month's forecast. The increased risk of COVID-19 cases primarily fueled by the Delta variant is clouding oil demand prospects going into the final quarter of the year, OPEC said in the report.
Moving on to the top news in the energy sector.
U.S. energy firms this week added oil and natural gas rigs for a fifth time in 6 weeks as offshore oil units in the Gulf of Mexico slowly started to return after Hurricane Ida slammed into the coast. This week, 4 offshore oil rigs returned in Louisiana, energy services firm Baker Hughes County said in its closely followed report on Friday. Last week, all 14 offshore rigs operating in the Gulf of Mexico shut due to Ida. All of them were seeking oil and located off Louisiana. Overall, the oil and gas rig count has increased for 13 months in a row through August as rising oil prices have prompted drillers to return to the well pad.
Saudi Aramco has notified at least 7 buyers across Asia that it would supply full contractual volumes of crude oil in October, though none of them asked for additional supplies despite deep price cuts, sources with knowledge of the matter said on Monday. The full allocation comes as the Organization of the Petroleum Exporting Countries and their allies including Russia agreed to ease supply cuts by 400,000 barrels per day, BPD, each month between August and December. OPEC is still cutting by around 5 million barrels of oil per day, but there seems to be plenty of oil from Saudi, one of the sources said.
Next, we have the top news in metal markets.
Aluminium prices rose to $3,000 a ton for the first time since 2008 on Monday as restrictions on output in China, the biggest producer, fuel fears that supply will run short. Prices of the lightweight metal used in packaging and construction have leaped 50% this year and 15% in only 3 weeks as speculators pile into the market. The benchmark contract on the London Metal Exchange (LME) was up 0.9% at $2,949.50 a ton in official trading after touching $3,000.
Lithium prices have jumped to their highest in more than 3 years thanks to an upsurge in electric vehicle sales, depleting stocks of the battery material in top consumer China. Targets to cut carbon emissions from China to the United States cannot be met without the rechargeable lithium-ion batteries that power electric vehicles. Right now it's very simple. The market is so tight that players are fiercely competing for any spot tonnage available, said Max Dudon, a trader at Transamin in Geneva. More investment in lithium production is needed to meet future needs of the electric vehicle supply chain, analysts say. We will now look at the top news in the agricultural sector. Russian wheat export prices rose for the 9th consecutive week last week as the country's export tax continued to grow, analysts said on Monday. Russian wheat with 12.5% protein loading from Black Sea ports for supply in early October was $300 a ton, free on board, FOB, at the end of last week, up 50 cents from the previous week, the IKAR Agriculture Consultancy said in a note. Sovcon, another consultancy, pegged wheat as having risen $2 to $303 a ton while barley was steady at $260 a ton.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.